So we'll start with Ind As 116. Sir, though this is also one of the lengthiest standards you have, but in terms of complication, the standard is not comparable with 115 or 109 and all. Standard is very, very easy, very simple. There are hardly some 5 or 6 questions where you should be little careful and the related concepts. That's it. Rest of the standard will be very, very smooth. In fact, if you see on the question bank, almost some 52 or 53 questions are there. In that, hardly the good questions, if you sit and mark once the entire standard is over, you will find only 7 or 8. Remaining all are small conceptual questions which will just help you to understand the concept better. They are not even examination worthy. Hardly some 8 questions are there which are good questions. Those questions only are getting repeated again and again. So anyway, so forget about the length of the standard. This is going to be very easy and also very important. Okay, now let me start with in a different way. Sir, the standard starts with explaining the scope and where the standard core principles need not be applied. So we'll do that part towards the end. So let's start with the background which we already have. Now, in your accounting standard 19, what you studied in C Enter, your leases are first classified, later on only accounting is identified. That means a lease is classified as a finance lease or as an operating lease. If a lease is classified as finance lease, according to AS 19, what it means is, in substance, lessee is the owner of the asset. Legally is not the owner. Legally who is the owner? Lessor is the owner. But the maximum benefits from the usage of the asset belongs only to the lessee. So it is appropriate that the asset appears only in the books of lessee and not in the books of lessor. So that is the entire thought process of AS 19. And in this case, the accounting guidance further is given like this. In the books of lessee, in the books of lessor. In the books of lessee, since he is the person who maximum enjoy the benefits of the asset is capitalized. But he did not buy the asset, nevertheless, he is a person who maximum enjoys the benefit. If you remember your hire purchase chapter also, the first entry what we used to write in the books of hire purchaser is trucks on hire account debit to hire vendor account. Hire purchaser is never the legal owner, but nevertheless asset is capitalized because that hire purchase is nothing but that is a different version of a finance lease only. So asset is capitalized and lease liability is recognized. So every time when you make a lease payment, that is understood as you are repaying your lease liability borrowing. So like that accounting is done. Since lessee books law we have capitalized the asset, lessor must de-recognize the asset. And asset place law he will recognize lease receivables. It is as good as lessor gave a loan to the lessee and lessee is repaying that loan every year along with interest. A installment, instead of calling it as installment, these people are calling it as a lease rent. This is the guidance given in our AS 19. Now when it comes to operating lease, the treatment here would be like this. In the books of lessee and in the books of lessor. Now in case of operating lease, what does it mean? Lessee is the person who is not the owner in substance. Since he is not the owner in substance, asset will not be capitalized. So no asset capitalization, and whatever lease rents are paid are treated as expense. Since lessee is not capitalizing the asset, lessor will continue capitalizing the asset. There is no de-recognition required. Whatever lease rents are there, that lease rent are income. So guys, this is a guidance of accounting standard 19, sir. Now what we are doing is the Ind As version of leases. Now what is big difference between AS 19 and Ind As 116? What is the difference? Now the difference is there only here. Lessee accounting no difference is there. Lessor accounting is still the same. So when you are doing accounting of lease in the books of lessee, you would not bother whether it is a finance lease or operating lease. That is irrelevant for you. A discussion also you should not bring. Whether it is a finance lease or whether it is a operating lease, the asset has to be capitalized in the books of the lessee only. Okay, but you may argue, sir, asset life 10 years. This fellow took it on lease only for 3 years. So, in a life of 10 years of the asset, if the lessee is using the asset only for a period of 3 years, why are you capitalizing the asset in the books of lessee? Isn't it 116 wrong in this case? Listen carefully. Ind As 116 does not ask you to capitalize the machinery. Ind As 116 asks you to capitalize the right to use the machinery. Now, I don't have right on the machinery for entire 10 years. But for next 3 years, what I will do with the machinery, what I will not do with the machinery, entire decision making rights I am having. No, for the next 3 years, the control over the machinery is there with me only. No. So technically, if we apply the old AS 19 principle, even though I am having full rights on this asset in the next 3 years, this would be classified as an operating lease, and therefore the asset will escape from my balance sheet. But when something is in your control and it is capable of giving you future economic benefits, it basically satisfies the definition of asset. It must appear in your balance sheet, but it does not appear if you apply old AS 19 principles. So this is a rectification of lease accounting from AS 19 to Ind As 116. Now in Ind As 116, now the present picture is like this. Sir, in order to do that questions where lease liability accounting, lessor books what accounting is done, all this, there's a lot of theory in between till we reach there. Okay, but I'm telling you in advance only what the ultimate accounting is going to be, so that you will be able to appreciate why we are learning these theory aspects. Ind As 116, sir, you will not first classify like this. You will classify directly accounting in the books of lessee and in the books of lessor. In the books of lessee, the broad entry what you are going to write is ROU asset. ROU asset stands for right of use asset. Asset means if I have a right to use for whatever small period it is, asset should come into my books. You are not capitalizing the machinery per se, you are capitalizing the right to use the machinery for the next 3 years. Even though the life of the asset is 20 years, it does not matter. So ROU asset account debit to lease liability. Now with what amount you should write and all, how to account this ROU asset hereafter, lease liability, and what should we do, we will see later on. But broadly the picture is this. Instead of doing this treatment, you can do the normal treatment of putting lease rent directly as an expense into P&L account in 2 cases. So exemption in 2 cases. One is a short-term lease where lease period itself is less than 12 months. Second one is low value items. In these 2 cases, if you want, you can do this accounting whatever is prescribed, or you can directly book off the lease rent expense in your P&L account directly instead of creating a ROU asset and a lease liability. Except for these 2 cases, nowhere the lease rent will go to P&L account. It has to be capitalized. The lessee books. When it comes to lessor, it is still the old school, sir. That means you will still ask whether the lease is a finance lease or whether the lease is an operating lease. If it is a finance lease, asset is derecognized because you don't enjoy any rights or benefits from the asset, and recognize receivables, that is called as lease receivables. If it is operating lease, asset is continued in the books and lease rent is income in PR. So this is your latest position of Ind AS 116 vis-a-vis what was there in AS 19. Sir, we never studied AS 19, sir. Unnecessarily you are troubling yourself. You might not have, but some of you might have. So for either way. So AS 19 ki Ind AS 116 ki the link, sir. Now what you have to understand is, instead of first discussing financial lease, operating lease like how we did in AS 19 once upon a time, today we will start discussion directly with lessee books ka accounting. Once lessee books ka accounting you understand, then we will move into lessor books. When we move into lessor books, at the time our discussion starts about what is a finance lease and what is an operating lease. But if lessee has to capitalize this, first you have to prove that whatever contract is entered between these two fellows, that is a lease, and you have to prove. So Ind AS 116, first thing, the definition of lease. Now there are two parties for sure. Between them there is a contract. A contract is lease, or a contract is so many other things, but or contains also a lease. If you establish that, then these people will become lessee lessor. Till then we will call them only customer and supplier. This fellow is a supplier of asset. He is a owner also, supplier of the asset. This fellow is a user of the asset. Once you establish that a contract satisfies the definition of lease as per 116, then we start using the terms called as lessor and lessee. First 15-16 questions, nowhere that fellow will use the word lessee lessor. He will be only using the word supplier customer, supplier customer. So because you are still learning the definition of lease, once the lease definition is over, there onwards questions we will start seeing the terms called as lessee lessor. So obviously the lease definition is important. As such, very simple also. So if you read, at the inception of the contract, the entity shall assess whether the contract is or contains a lease. Contract can be completely lease, or it can be so many other agreements. Along with that, lease also can be there. So it is in page number 3, page number 3. So first, if you have to evaluate whether the contract is lease or it contains a lease, you have to go and understand what is the definition of lease. So lease is defined as a contract or a part of contract that conveys the right to control the usage of an identified asset for a period of time in exchange for consideration. Whatever we have highlighted, if 4 parts, if you analyze individually, that itself covers 20 questions in your study material. Out of your total 45 questions, 20 questions are only on those highlighted parts. So what he is saying is, there is a contract. So obviously there are 2 parties and there is a contract. In this contract, there are 4 terms he is using. One is right to control the use of what? Of an identified asset. Sir, forever, for a period of time. That can be forever also. That can be only 10 days also. That can be one month in each year also. That can be continuously 3 years also. Whatever it is, it must be defined. For a period of time in exchange for a consideration. If 4 aspects one by one you have to discuss, sir. That's it. This is our first part. Idanta theory, sir. Once this theory is over, you will establish that there is a lease. Once you establish that there is a lease, then onwards we will start talking about the accounting of lease in lessee books. Slowly we will go into lessor books like that. This is how we are going to do it. Now, there is a chart later on we can see, because the chart, if you have to understand, some more points needs to be covered. First one, sir, the most important one, identified asset. Now, if there has to be a lease contract, in the contract, which asset ka right to control the use is passed on, asset must be identified. What is the meaning of identification is, you should be able to describe it, or somehow you have to prove that only this particular asset will be available to you. Simple example. Suppose, sir, you are booking a cab service. When you book a cab service through your Uber, Ola and all, the moment when you are booking, sir, when you have placed your destination where you want to go, Ola or Uber ka promise is we will send a vehicle to you. Will they promise that we send a particular vehicle to you? So once the cab driver is assigned, somebody accepts your ride, then only you will know. Can you go and request them, we want only this car? You can't. On the other side, imagine you are going on a travel for a period of 3 days. You need a car. You booked some Zoom car. That fellow give you options. Zoom car, which car you want, which color you want, depending on availability, you can select. Based on that, that car only will be available to you. So at the time of making the contract, I know which asset I am taking here for ride. Like that, in the lease contract also, the asset must be identified. If asset ka discussion does not happen, then there is no lease contract according to the standard. So asset ka description, asset ka details must be available. So what it eventually means is, when you speak about an identified asset, the name itself tells you that e asset ka existence or e asset ka, the understanding about this asset must be mentioned in the contract. Now, he says that asset can be identified either explicitly or even implicitly. What is the meaning of explicit? Let's say, I want a property on lease. You are the owner of 3 buildings in a particular area. So, building 1, building 2, building 3, all the 3 buildings belongs to you only in a particular area. Now, I want to take this building 3 on lease from you. When we both enter into a contract, the contract should clearly mention about details about this particular building. Details like what? East facing or west facing, or what is the exact location of that, opposite to this landmark, or sometimes these days rental agreements and lease agreements, so they are even mentioning longitude, latitude points also. So clearly, e particular asset we are talking about, not about 1, not about 2. So you should be able to distinguish this asset from the other assets which the lessor owns. So like that you are able to identify. Similarly, you are making a contract for lease of a car for a period of 1 year. Which car it is, you should clearly write. Which color car, which brand car, it should already travel not more than so many kilometers. I want not a very too old car. Like that, detailedly all that specifications. That means indirectly he's saying that all the specifications must be mentioned. If all the specifications are mentioned, that is called as explicit identification of an asset in the contract. But he also says that sometimes identification can happen implied also. How implied? Look at this. Suppose this fellow is a supplier of the asset. He is the owner of an asset. This is the only building he owns. Owns only 1 building. I enter into a contract with this fellow that a building I want it on lease basis. We did not mention about which house number, location, all that is not mentioned. Why it is implied? Why is it implied? That fellow has only 1 house. He cannot give somebody else's house to me on rent. No sir, obviously if he has only 1 house, that 1 house only he will make it available to me on rental basis. In that case, The house number, the landmark, all that need not be keenly identified in the contract. It is implied. So it's like this, sir. I went to a person to ask his daughter for marriage, example. Now, he will not ask which daughter because he has only one daughter. In that case, isn't it implied, sir? When I ask him, it's already known. Both the parties know about whom we are talking. There's something like that. If that fellow has 3 daughters, then I have to mention. You have to mention, sir, first one, second one, third one. It's something like that. Explicit, implicit ka meaning is, see, it's not about, no, I'm not joking. What I mean to say is, sir, which asset ka, shut up here. Okay, I can also make jokes, but don't drag me into that. I know where it is going, shut up now. This fellow is thinking, what if he has only boy? Thinkings are enough. So anyway, that is a joke, sir. Okay, leave it. The point is, about which asset this deal is going to happen, that must be identified in the contract. Okay, number 1. Next thing. He says that the entire definition of lease is something which you should check at inception of lease. Inception ki separate definition is there. I would not want to mix that definition into the main definition of lease. So time being you understand it, understand that inception means what? General understanding, starting point, beginning. Okay, another definition is there, later on we'll see. Now, the standard also says that asset need not be in existence at inception. Look at this example. There is X Limited, who is a fabricator or manufacturer of a machinery. This fellow is the customer. The contract date is 1/1/2024. On this date, this customer gave a detailed list of specifications about machinery. I should have this, I should have this, I should have this in the machine. Like that, full detailed specifications he has given. And told that I want the asset to be available on 1st March 2024. So this is the date of lease commencement. So the lease period actually starts from commencement of lease. But the contract is written on this date. This is called as the inception of lease. This is nothing but the contract date. Now, what kind of asset the customer wants, he would specify on which date, sir? Obviously on the contract date. So, detailedly he specified. X Limited also agreed. Is the asset identified or not? Is the asset identified or not? Asset is identified because in the contract, which asset X Limited would give to customer clearly identified because there are so many specifications. Now comes the twist that X Limited does not have that asset on the starting day. He does not have the asset. What X Limited is planning is, customer gave me his requirements. No, based on that requirements, I will now fabricate the asset. By the time I have to deliver the asset on 1st March, it will be delivered. So, to qualify a particular contract as a lease contract, should the asset be existence on the first day? The answer is no. Because a particular point when you listen to it for the first time, it appears like, without asset, how can you call it as lease, sir? Don't think like that, because I am not talking about accounting of lease. Lease accounting, asset recognition, liability recognition, all that will happen only from the commencement date. Without an asset physically being there, why will I even start accounting of asset? I will not do. The analysis what we are doing is whether first of all the contract what you have entered is a lease contract or not. We are just evaluating that. For the purpose of that evaluation, the decision making has to be done on inception date. Inception date, in your contract, did you write clearly about the asset or not? If you have written, that's all. Asset is identified. Asset physically may be there, may not be there. Suppose X Limited does not have the asset, but based on the requirements what you gave him, he will buy the asset from somebody and he will make it available to you. This is how it happens for most of the airline industries. For example, A Limited is in airline business. This fellow saw a particular new model flight, new model aeroplane he has seen. He wants that for the purpose of his business now. He says that this is very world-class airplane. We want that. We can sell tickets at a higher rate. Our planes have already become old. So I want to take this plane. But he does not have money to buy the plane. He wants to lease it. He went to the original airplane manufacturer and asks him, will you give this asset on lease? He says, I won't give it on lease. If you want to buy, buy, otherwise get out. But this fellow wants only on lease because he does not have full money to buy the asset at a single payment. So what he did is, he went to Excel Limited. Excel Limited is the asset financier. These both fellows wrote a contract on 1/1/24. In contract what is written is, Excel Limited should supply the aeroplane to A Limited on 1/4/24. In next 3 months, now you tell me what Excel Limited will do. Excel Limited does not have aeroplanes, sir, but Excel Limited already made a deal with A Limited that Excel Limited will supply with the aeroplane on 1st of April. A contract is entered on which date? 1/1. Which aeroplane will he supply? Anything, whatever he likes, sir? No. In the contract, it should be very clearly mentioned. Specifically, everything should be identified. Technically speaking, is Excel Limited having the asset? No. But still, the contract contains a lease. There is an identified asset because asset related details are mentioned in the contract. Next 3 months now, what Excel Limited will do is, he will invest his own money and buy the aeroplane, and that asset he is going to give it to A Limited. Sir, why is Excel Limited doing this? What is A Limited objective? Somehow use the aeroplane for the purpose of his business. What is the objective of aeroplane manufacturer? He wants to sell the aeroplane. What is the objective of Excel Limited? He wants interest income. He wants interest income. So what he does, he invests his own money, buys an asset, give it on lease, earn lease rentals in such a way that he recovers not only his original investment, also some extra return for the amount invested for next 5 years or 6 years. So every party has got a different interest in this. Otherwise, nobody will enter into a contract. Every party will expect something only and enter into a contract. Here what I am trying to prove is, on first day, asset need not exist. Asset may not be physically there with Excel Limited on day 1. It is sufficient if asset is identified on paper. But of course, asset has to be delivered on which date? 1/4. This date is called as the commencement date. So to evaluate whether a contract is lease or not, you need not have the physical existence of asset on the first day. It's a very important point. Explicitly specified or implicitly specified. Next, suppose, sir, a particular contract asset is identified. Even then also, it may not be a lease because of 2 aspects. One, because of substantive substitution rights of the supplier. The other one is the physically distinct point. There are 2 points. These 2 points, if you fail, then even though asset ka details are written or asset is identified, still there is no lease contract for you. So what are these 2 cases? Let us see. First aspect is very easy and very common sense point. Substantive substitution rights of supplier. Suppose, sir, A Limited is a customer. This fellow is a supplier. There is a car for which lease contract is entered. For the lease of car, A Limited pays to supplier ₹40,000 per month he is paying. A lease contract exists only when a car is identified in the contract. Car must be identified in the contract. What our standard says is, if this supplier, if he has right to substitute the car with another car, then this is not a lease contract. It's as good as the asset is not identified. Reason, sir, I entered into a contract for a particular asset. E asset ka full rights who should have now? A Limited should have. Because he has all the rights only, later stage low I will tell you that this fellow has to capitalize the asset in his books. When you are nicely using the asset, when you nicely capitalized also, tomorrow the supplier comes and tells you that I have a right to take back this asset. I am taking this Benz car from you. I am giving you Indica. Use it for 1 month. Later on again I will give you Mercedes car. Will you accept that? Maybe you will, maybe you will not. But the point is, if the supplier has the right to take back the asset what he has given to you, in that place if he has a right to substitute some other asset, it directly counters with the right of the customer to use an asset. It is as good as there is no identified asset in the first place. Therefore, there is no lease transaction. Sir, but just because he has a right to substitute, he may exercise, he may not exercise. No, sir. That's the reason the standard uses the word substantive substitution rights. Substantive ka meaning is considerable, likely to be exercised. That means he has the right, but he may exercise, he may not exercise. No, sir. You will not call it as a lease only if his substitution rights are substantive. If they are not substantive, that means he has a right, but he is not likely to exercise. In that case, we will let it go. We will say that this is an identified asset. There is no problem. Sir, but when will I know whether the substitution right of the supplier is substantive or not? Now, listen, sir. I am a regular gym goer from the last 10 years. I'm very powerful. I have a lot of power. I can break this table into pieces also. One punch. Now, what is the chance of I hitting you? I hitting you. What is the chance of I punching on your face? What is the chance of this? Chance is very less. Why? Just because I have power, will I use it on you? No. Case 2. I am very angry on you. I want to beat you. But I am very weak. Very weak, extremely weak. I get scared. The moment somebody argues also I start crying. But I am angry on you. What is the chance of I hitting you? Very, very less. Imagine 1 and 2 both mixed case. I am very powerful, lot of energy, plus I am angry on you. You should be really scared now, isn't it? The chance of hitting you is very high. Like that, is substitution right, whether it is substantive or not, the standard gives you 2 conditions. What it says is, the supplier first should have the practical ability to substitute alternative asset throughout the period of usage. He has a right to substitute, okay. But if that right, if it has to be a substantive right, the standard says the supplier should have a practical ability to substitute. Number 1. Sir, he has ability, sir. He will take away this asset. He will put another car for me. Okay, next one. Will he do that? For that, second condition. The supplier would benefit economically from exercise of the right to substitute the asset. What does it mean? Because he takes away the asset what he gave to me, and in that place if he substitutes another asset, then because of this substitution exercise, the supplier should be gaining some money. That means he has ability to do so, and if he does, then he will get benefit also. Then the standard says his right to substitute is substantive. If that is substantive, you don't have a lease contract. Because lease contract ki asset must be identified. Lease contract ki asset must be identified. Some asset you wrote in the contract, but that asset that fellow can take away any time he wants, and he has the ability to take such asset, and if he substitutes this asset with some other asset, he is going to benefit financially also. Then the chance of he substituting the asset what he gave to you is very, very high. Therefore, there is no identified asset for you. Here after standard you need not read any further. 116 is not applicable for you. Because there is no identified asset. If it is not there, lease and a definition you failed off. 116 is not applicable for you hereafter. Now, look at this. So, X Limited made a lease contract with me that he will give me Tata Indica car to Y Limited for a period of 2 years. This fellow has a right to substitute. He has a right to substitute the car. Now, whatever standard asks is X Limited having the practical ability to substitute this car with another car? For that, how will you know? Suppose X Limited has only this car and he has no other cars. Then he does not have practical ability to substitute this car with some other car. On the other side, if he is having a fleet of cars, some 20 cars he is having. Suppose a big customer comes or a new customer comes. What he does, the new car what today he sent to me, he'll say that, sir, I need this car for next 1 month. Some NRI party is coming. I have to divert this car there. Time being you use the old car and he can give me another Indica car. Possible or not possible? That is possible when he is having lot of cars, right? And he is going to benefit economically because of this substitution. If both the points are satisfied, then we'll say that the right to substitute is substantive. And if it is substantive, you do not have an identified asset. Whatever asset you have contracted, that can be taken back. When something can be taken back by the fellow who is giving to you, with what face will you go and capitalize this in your balance sheet? How will you call something as your asset when somebody has the capacity to take it back and is likely to take back? Another example, see. Suppose instead of Tata Indica car, let us make it a machinery. And this machinery is a highly customized machinery. So X Limited made the machinery towards Y Limited based on the specifications of Y Limited, but highly customized. In this case, what is the chance? What is the practical ability? He has the right to substitute. But with what asset he should substitute? He should again substitute with some other asset which is also customized according to my requirements. The chance of doing that is very, very less. And therefore, the substitution rights are not substantive in that case. Since substitution rights are not substantive in that case, we say that there is a identified asset. Now, here one genuine question comes. Sir, I am Y Limited. Sir, suppose you are X Limited. You will know whether you are going to substitute or not. Decision making you can do easily. Suppose I am Y Limited lessee. How will I know whether this fellow has the practical ability, or even if he has the practical ability, whether he would be benefiting because of that or not? How will this fellow know? He may know, he may not know, isn't it, sir? The standard says that if you are unable to determine whether these rights are substantive or not, assume that they are not substantive, which means that there is an identified asset for you in place. You need not sit and hire a private investigator, go and see whether he will substitute or not, whether he has practical ability or not, is he talking to other customers or not. All that you need not do. If you know, apply. If you do not know, presume that supplier's substitution rights are not substantive and therefore you are having a identified asset on your hand. That's all, sir. With that, we are done with the substitution rights ka point. Once again I repeat, sir, we started from here. Lease is a contract. In that, identified asset must be there. Now we started understanding what is identified asset. Asset must be identified. Ante which asset is going to be taken on lease, clearly the contract it must be stated. Generally it will be stated explicitly only. But the standard also permits that sometimes it is implied also. If you are the owner of only one asset, I am talking about only that asset, so I need not explicitly write so much details about the asset. Therefore, in some cases it can be implicitly identified also. In these two special points are there. Special point 1 is, if the supplier has a right to substitute the asset given to you with some other asset, then you have to go and check whether that substitution rates are substantive or not. If they are substantive, which means it is likely to be substituted, in that case there is no identified asset for you. So whether it is substantive or not depends on 2 points. What are the 2 points? Whether the supplier has the ability to substitute, and because of that substitution is he going to make a financial gain. If these 2 points are satisfied, there is no identified asset for you, there is no lease contract only. Clear, sir? If you are unable to determine, then presume that there is an identified asset. Assume that our substitution rates are not substantive in nature. This is the first point. Second point is, in relation to identified asset, he is talking about physically distinct ane point. What is the meaning of physically distinct is, sir, this is the building which is owned by X Limited. There are 1, 2, 3, 4 total 4 floors are there. I want to take 4th floor on lease. On rent basis, we want to take. So Y Limited is a customer. Whatever standard says is, in the contract it is not sufficient if you identify the building, that is not sufficient. If you say that I am taking 1 floor out of your building is not sufficient, you should be very pinpointedly able to identify that 4th floor in the building located in so and so area near this particular hospital, a particular 4th floor ke we are talking. Clearly it should be distinctly identified. If something is not physically distinct, then there is no identified asset. For example, the contract is like, out of this floor 4, sir, all 4 are empty only. You come and stay in whatever floor you want. That's what the supplier told. As a customer, you also agreed. There is no identified asset. You are paying monthly rent of 50,000. The supplier told, sir, any floor you take, sir, all 4 are empty only. There is no identified asset. Asset identifier, physically it should be distinct from other components which you are not taking on lease. Next, I'll give you another example in this. It's a kind of exception to the point what I just now told you. Suppose, sir, this is a warehouse, means a godown type, empty warehouse owned by X Limited. Its capacity or else its floor size or SFT size is, let us say, 1 lakh SFT. Some 7-8 floors, big godown is there. 1 lakh SFT. Y Limited is a customer. Y Limited went to X Limited and says that, sir, I want 97,000 SFT on lease. I want 97,000 SFT on lease out of your total 1 lakh SFT. He asked, why are you taking only 97,000? Sir, I actually need only 92,000 or 93,000. My goods are coming from my factory. They are to be sold in the city. So meantime, I want to store my goods here. Safe side, I am taking some 2-3,000 extra. I don't need 1 lakh. I actually need around 90,000 only. But on a safe side, I am taking a little higher number only already. So don't make me take entire 1 lakh. Supplier says, okay. Now, E total 1 lakh SFT lo, which 97,000 SFT are you taking? That if you identify, then only it is called as physically distinct. Total 1 lakh is there. Use any 97,000 you want, is technically the failure of the term called as physically distinct. But the standard gives an exception. What exception the standard gives is, if the customer has contracted to obtain all or substantially all of the capacity of the asset, in that case it need not be physically distinct. Did I obtain 3,000 SFT on lease? No, I obtained 97,000 SFT. 97,000 is almost 100%. It is not 100, I agree, but it is almost all. The standard says you need not physically identify. If you physically prove it, sir, I want this entire space except this corner, everything else I want. If you specify also, okay. Don't specify also, okay. Why it is okay in this case is because you have contracted to obtain substantially all of the capacity of the asset. Suppose instead of 97,000, had I made it 1 lakh SFT, it would have been much more easy to answer, isn't it, sir? Because in that case, doubt only will not come. Which 1 lakh and will I ask? Because there is only 1 lakh. Entire 1 lakh only I will take. That implied there. But specifically, I need not physically prove it. But when I take only a portion and not the entire thing, their confusion will come. That's the reason I am showing you 97,000 example. 97,000 is substantially all of the capacity. Language is not substantially. Correctly use, correctly read, correctly observe. Substantially all. But 60% if you take, that is not substantially all. That can be substantial space. But point exemption you will get when you take substantially all of the capacity, not substantial capacity. Don't misunderstand, misquote. Sir, substantially all means how much percentage, sir? Standard does not define that. Generally 90% or more is considered as substantially all. Substantially all ki standard lo there is no definition. Case 2, this is the second point, sir. Please read. An identified asset must be physically distinct. A physically distinct asset may be an entire asset or a portion of the asset. For example, a building on a whole is considered physically distinct, but one floor within the building may also be considered as physically distinct if it can be used independent of other floors. Next one. Even if the asset is not physically distinct, it can still be treated as identified asset if the customer contracts to obtain substantially all of the capacity of the asset. So this is one case where your physically distinct on a point need not be identified. Out of that 1 lakh capacity, which 97,000 you can store your goods anedi you did not identify, does not matter. Suppose, ide example, if you have, this is the godown. If this is a godown whose capacity is 1 lakh SFT, it's, sir, warehouse and etlon do you know, sir? Just a plain hall and nothing will be there. Cold storage, AC will be there. Otherwise, nothing, like a plain, literally like a plain floor, sir, without any pillars and all, plain hall, big auditorium, empty auditorium, like sir, warehouse. Suppose there is a customer who wants to take only 30,000 SFT on lease. If this fellow is taking only 30,000 SFT on lease, this is not substantially all for sure. In that case, which 30,000 is he taking? Clearly you must mention and identify. If you identify like that, then only physically distinct on a point is satisfied. Otherwise, physically distinct point is not satisfied. Sir, the supplier told me to use any 30,000 SFT in that warehouse, sir. That is a failure of physically distinct point. If you fail that, there is no identified asset. If there is no identified assets, there is no lease contract. So which, sir, prove without knowing which asset you are taking, how can I go and write an entry that I have a right to use an asset? Which asset you should know? No. If contractuality is not defined, how can I take this? That's the problem. So physically distinct is a very, very important criteria. Sir, on the concepts what we discussed till now, at least some 5-6 questions are there directly on this. So before we move to the questions, you have just till now covered only one aspect, which is identified asset. Lease definition you studied, in that one aspect you covered called as identified asset. Next aspect is right to control. Don't read inside, sir. Control means what? Because you studied in 110, you studied in 115 also, now it is 116. Again, adhe definition, adhe meaning. Control means what? I don't want exact definition here. Mind lo what is there? Control means what? Control meaning is, sir, decision making right should be there with us. that is called as control. Whenever decision making rights are there with you, you say that you are able to control something, isn't it, sir? Parent, why is it called parent in the first place? Because that fellow is able to control the subsidiary. Control A not there, this fellow is never a parent, that fellow is never a subsidiary. Here also the same thing, but one more extra point is also there. What is the definition of an asset? Basic, from from C entry was studying this. Asset is a resource controlled by the enterprise as a result of past event from which future economic benefits are anticipated to be earned. So asset definition lo control in a word is there. Future economic benefits and a point is also there. A control and future economic benefits, both if you read, what it means is you should have power to obtain all the benefits from the asset to your entity only. At the same time, you should have the power to stop others from enjoying the benefit of the asset. That is actually called as control. Plus, by default, control means since the asset is mine, I should have a decision making right on this asset. So just because you buy a car, does it mean that every day you should travel in the car? No. Whether I will travel, I will not travel, I sublease it to somebody, I sell it, or I simply daily just watch and do nothing with that car, that is my wish. A decision making power I should have. Away conditions are kept here also. If you think, then it is easy. Read, sir. To assess whether the contract conveys the right to control the use of an identified asset for a period of time, the entity shall assess whether throughout the period of usage the customer has both the following. Both you have to satisfy. Number one, the right to obtain substantially all of the economic benefits, and a word is missing, sir, please add it. All the economic benefits from the usage of the identified asset, and the right to direct the usage of identified asset. 2 points. All benefits should come to you only, plus right to direct the usage. Right to direct the usage is nothing but your decision making rights. On first point, full explanation. On second point, full explanation. A and B sub points are about explaining you about A and B individually. But anyway, let us see like this. So when you talk about right to control the usage of the asset, two conditions you have to satisfy. One, customer obtains, again see the wording, substantial gadu, substantially all the economic benefits. If you see the language there, economic benefits from asset anatles, sir. Do you read the language there? From the usage of the asset. Sir, what is big deal? Both are same, no? Not necessarily. And customer has decision making rights or right to direct. Right to direct the usage. Suppose, ma'am, A Limited obtained a machinery on lease. A particular machinery used for production of goods, and goods are sold. Tell me, sir, e money belongs to whom? E money should belong to A Limited. Customer should obtain substantially all the benefits from the usage of the asset. I took a machinery on lease, I'm manufacturing goods, I'm selling that goods. Sale of goods ka money should belong to me. Right. Next. I have a small confusing question, try to answer. When goods are sold, ಈ money belongs to A Limited, but A Limited agreed to pay 40% of sales as lease rent to X Limited. Let's say the supplier name is X Limited. Is it a violation of this condition is my question. Out of the total sales, 40% of my sales, whatever amount is there, I amount have to pay it as lease rent to the supplier. Is it a violation of the condition? No. Everybody yes? No. Listen. Suppose sir, 40% of sales came to 4 lakhs. Instead of 4 lakh rupees, instead of saying 40% sales, had I put that 5 lakh rupees lease rent I have to pay, then there is a lease. Sir, here I put 40% of the sales. Let us say in a particular year 40% of the sales came to 4 lakh rupees. You are saying that sir, sales lo major money you are giving it off to the supplier, so substantially all benefits customer is not enjoying. Where is the right to control the usage of the asset? Because substantial benefits are going to the supplier and not the customer. It is not like that, sir. Lease rent ka payment anyway you have to do. Lease rent ka payment can be fixed rent or it can be a variable rent. And when you say it is a variable rent, that can be varying on any aspect. It can vary on the market interest rate. It can vary based on the sales. It can vary based on the number of customers I serve. It can be varying on various things. Okay, so just because you have a variable rent which is linked to sale does not mean that substantial benefits of the asset are passed on to the supplier. It is not like that. This is only used as a base to determine the amount of rent what I have to pay. Sir, for that matter, even if I say instead of 40% sales, suppose I say that there is a fixed rent of 5 lakh rupees. You tell me, where do you think A Limited pays that rent from? From where will A Limited pay? A machinery he will use, he will manufacture goods, a goods he will sell. A money to he will anyway pay rent. Does it mean that all the benefits from the asset are belonging to the supplier? No. So just because rent is put as a variability on sales does not mean that substantial benefits of the assets pass on to the lessor again. It is not like that. That is just a mode of payment. I just wanted to ask you just to confuse you, but it's a good point. Second one, look at this. Little deep example, but you'll understand. Sir, X Limited is a manufacturing company. This is a factory belongs to another company, Y Limited. X Limited leased the factory. Y Limited is the owner of this building, but this fellow has leased the asset. Because you are manufacturing some product, you are releasing carbon gas. You may not know because it's not there in your syllabus till now. Of course, it was there once upon a time, they removed it. Sir, every manufacturing industry in certain businesses, they release lot of carbon monoxide into the atmosphere. Because of that, lot of pollution gets created. What they have done is, depending on your capacity of the industry, they decided that how much carbon emission you can do, some restrictions are there. Let us say that for this business, X Limited has to do its business for survival. Sorry, process law, I will kill the environment, sir, kill. Allowed to release 1 lakh tons of carbon per annum. He says that you will anyway spoil the environment, but have some responsibility. Don't spoil more than 1 lakh tons. Employ methods in manufacturing of goods which will save carbon emissions, where you will release less amount of carbon emissions. Sir, if I do that, what will I get, sir? Everybody is commercial, no? What this fellow says is, based on your production, actual carbon units released is only 80,000 units. So how much you did not utilize now? Even though you are allowed to damage the environment to the extent of 1 lakh tons of carbon, you released only 80,000 tons. Good. Then you are given 20,000 carbon credits. This is like you saved environment, no? You have been given 20,000 carbon credits. What is this, sir? Award? Not award, reward. What you can do with this 20,000 carbon credits is sell it. Sir, who will buy, sir? Who will buy? Look at this. In some other country, some other fellow called Y Incorporation, his permitted capacity, like your entity only, is 1 lakh tons. But he has order book in such a way that he has to manufacture so many goods, he will emit definitely more than 1 lakh tons. The rules say that if you want to emit more than what is permitted, then for the extra damage what you are causing to the environment, go and buy carbon credits from somebody. Meaning, this Y Limited has production of 1,20,000 tons of carbon. Therefore, excess carbon released. How much excess carbon released? 20,000. He can do that only if Y Limited has carbon credit. But Y Limited does not have. Who has? X Limited has. So, Y Limited now buys carbon credits from X Limited. That means, first you save the environment. You get some carbon credits. Somebody will spoil. That fellow, whoever is spoiling, he will pay money to you. Ultimately, what is happening? The person who is saving the environment is getting money from the person who is damaging it. At the same time, everybody will develop a sense of responsibility that we should control the emission of carbon gases into the atmosphere. This is the entire protocol ka original goal, sir. It was part of your syllabus, it removed. Anyway, why I am giving you this example is, tell me, sir, E factory who is operating? E factory who is operating? X Limited. So who will get this award? X Limited only will get the award, not Y Limited. Who is Y Limited? Y Limited is the owner of this factory, but this factory is taken on lease by X Limited. E primary benefit is the goods ka sale. Secondary benefits like this carbon credits and all, everything should belong only to the customer. Nothing should belong to the supplier arising from the use of the asset. I'll tell you another example. Suppose there is a machinery. This is a power plant, not machinery. Imagine it's a power plant. That too, it is solar in nature, solar power plant. Legal owner is X Limited. Customer and user is A Limited. So this fellow gave this machinery to him. This fellow pays him lease rents every year. Today, new government has come who has a lot of responsibility towards power saving, energy saving and all. What that fellow announced is, whoever is using or operating solar power plants, whoever has constructed solar power plants, they are eligible for an incentive. So government announced incentive of rupees 10 crores to the owner of power plant, owner of solar power plant. Who is the owner of solar power plant? X Limited. In our drama, X Limited is customer or supplier? Supplier. He is a supplier of the asset to customer A Limited. So tell me, 10 crore is a direct benefit or indirect benefit? Indirect benefit. But what did we just now discuss? whether it is a direct benefit like production of goods or services, or indirect benefits like carbon credits and all, they all should belong only to the customer. But you are seeing an example where the government is giving a benefit directly to the owner and not to the customer. Is it violation of our principle? At least little. Is it violation of our principle? The answer is no. Why it is not a violation of our principle is, we are talking about benefits which are resulting as a result of use of the asset. E benefit of government incentive that is not coming because asset is used in a particular way. It is given because somebody constructed the asset in a particular way, not because of usage. Even if X Limited has not leased this asset to A Limited, then also X Limited would have received this benefit anyway. E type of benefits which X Limited receives directly from the government is not a violation of your first condition, because substantially all the benefits from the asset ka usage should belong to the customer, not from the ownership. Government gives a tax exemption for these kind of assets. Who will enjoy the tax exemption? Income tax point of view, do you think that they accept Ind As 116? No. India's income tax point of view, whoever is legal owner, only that fellow will get a depreciation claim, nobody else. Who is owner? Supplier. He will get the deduction. So tax benefit, whatever is sir, tax benefit he is eating away, sir. That is indirectly my benefit, sir. I am paying all the lease rent. Doesn't matter. That is a benefit which is coming because of ownership of the asset, not because of the usage of the asset. We are only worried about the benefits which are arising from the usage of the asset. So our benefits should come only to the customer. So that's a restriction there. Next. Regarding this point, customer should have right to direct the usage of the asset. What is the meaning of right to direct the usage of the asset? It means where to use the asset, when to use the asset, how to use the asset. Decision makings should be done by the customer. So whether to use the asset or not, if he wants to use, when to use, how much to use, where it should be used, all this decision making rights should be there with the customer. Supplier should not have that decision making rights. Sometimes suppliers put some restrictions on this decision making. If restrictions are there to such an extent where customer rights are getting affected, then the point is failed. Because right to control the usage of the asset, if supplier has put so many restrictions already, then what can I decide there? I cannot do any decision making there. In that case, second point gets failed. If second point gets failed, right to control gets failed. Once this is failed, when you don't have control on the identified asset, with what face will you capitalize ROU asset in your balance sheet? Control is important, no sir. Control if it is not there. Decision making right you cannot enjoy, then you cannot call yourself as a lease contract basically. So second point is important. Now listen here. He says that supplier should not have too many restrictions on this. If supplier has too many restrictions on this, then the customer decision making power gets disturbed. Therefore, the entire point is failed. However, it is not a violation of second point if if the supplier is having protective rights. Protective right example is, suppose sir, I am the owner of a car. You are a taxi driver. You want to take this car on lease from me for a period of 1 year. I told you that take this car, use it for your Ola, Uber, whatever apps you have installed, take people on rides, but don't cross the city limit. Do not cross the city limit, condition number 1. Condition number 2, a car must not be used for teaching, driving to other people. Second condition. Third condition, you are not allowed to sublet this asset. 3 conditions I put, sir. 3 conditions you put, you are interfering with my basic rights. Can you say like that? Conditions, whatever restrictions I put, they are in order to protect my asset, not to give so much freedom to you in such a way that you ultimately end up damaging my asset. For example, I am a truck owner, sir. Truck national permit is not there. Only within the state it can move. I gave this truck on lease to you. At the time of giving lease, what condition I will put? Arey Babu, don't cross state borders. Within the state only you play. Why will I put that condition? If without permit you go on the national highway crossing the state borders, somebody catches, my truck will be in risk. They'll stop my truck there. In order to protect myself, I put some conditions. Those conditions are not to be seen as interfering with the decision making right of the customer. They can be there, not a problem. If it is protective rights of the supplier, then that is not a problem. Definitely, sir, if somebody else's asset you are bringing, won't that fellow put some restrictions, some minimum restrictions? Definitely he will put. Our restrictions are okay. Suppose, sir, you took a residential apartment. Our owner clearly says, in these business activities are not allowed. Inside CA office open chestante, they won't accept. Night 12:30 varaku returns filing, customers coming, going, not acceptable. Because other people will complain. I have to pay penalty to the association. I will very clearly say, business activities not allowed. Recently in our apartments, some lady started a cloud kitchen. So Swiggy, Zomato people, they continuously coming and going all through the night. Customer orders, because it's a software hub, so lot of people eat midnight also. So customers are there. But you are entering a residential premises throughout the night. Somebody posted a complaint, got that removed. So our type of restrictions will be there, but those restrictions are not to be seen as interfering with the decision making rights of the customer. Okay, last point in this. The last point is, sometimes how to use the asset, when to use the asset, all these will be predetermined. Suppose, sir, there is a power plant. Our power plant is already fixed in a particular place. Power plant is not something which can be moved from one place to another place. No, it's already fixed. So where is fixed? It has a limited capacity. Means you cannot extract a power more than a 10 megawatt in a particular day. So how much is already fixed? So like that, there are so many things which are already predetermined. So when everything is predetermined, how can I exercise my decision making rights, sir? Standard says that if everything is so predetermined, you are seen as having a control on the asset if you have the right to operate the asset. At least when to switch on, switch off, a right you should have. Okay, if everything is predetermined, that means how much quantity of power should be generated, predetermined. Where the asset should be used, predetermined. Then at least the customer should have a right to operate the asset. When to use or not, at least give me that right. Either if you have this, you are having a right to control the usage of the asset. Or that also you don't have. Then the standard says, chalo. Where the asset has to be used, predetermined. When to use, that right also you don't have. Right to operate, you don't have. Then things are looking very bad for you now. Because how, where, when, anni predetermined ayipay, sir. When everything is predetermined, what right will you exercise? So technically speaking, you are gone. There is no right of yours on that asset because everything is predetermined. Whether you apply your mind or not, that will anyway work. Whatever has to happen will anyway happen. Somebody else will take your decisions. Standard says, last one chance is there. If all these points you don't have, everything is predetermined, then you have right to direct the usage of the asset if you participated in designing of that asset itself. Everything is so predetermined, no? Everything is system based. At design, how do you say? At least you involved in the design. If you have involved in the design, whatever your requirements are there, that you have already packaged into the system in the course of its design itself. And therefore, you are having a right to direct the usage of the asset. Even though every day you need not go and operate it, but you have inbuilt inside the system all your requirements. So these are last punch, sir. So let's see how these are all framed. Right to control. He is talking about 2 points. So one is substantially all the benefits you should enjoy. Second one is you should have a right to direct the usage. First one we are talking now, that is substantially all of the economic benefits. Primary output ka right you should have, goods and services ka sale. Byproduct, renewable energy credits, carbon credit example, whatever I told you, that is that. Subleasing the asset. If your asset is subleased, income should belong to you, not to the original lessor, original supplier. So, benefits ki you should have a right. Points which do not affect Customer rights. This is nothing but protective rights wala points or whatever I already told you. Next one. Right to direct the usage of the identified asset. That means the customer has a right to direct the use if substantial decisions linked to how and what purpose, where and when the asset will be used can be taken by the customer. If you have a right to take decisions about how, when, where, then you are having right to direct the usage of the asset. Then we have given examples of what are that various decision making. They are not relevant. When the examples, leave it. Then he says that if the relevant decisions about how and what purpose the asset is to be used is already predetermined, then he says that you are having right to control the asset only when you have right to operate the asset, or at least you have involved yourself in designing the asset. If you are operating the asset, what does it mean? You will at least determine how much quantity of power to be generated using that leased asset. So at least that decision making is in your hand. That is also not there, then you technically don't have any right to control the asset unless you have participated yourself in the designing of the asset itself. In that case also it's okay. So everything is predetermined. No, predetermined. What is predetermined? That you only decided, not the supplier. If you yourself have designed and decided that, then it is fine. You are having right to direct the asset usage. So this is about second point. Now till now what we have studied is two aspects we finished. One is identified asset. The other one is right to control the usage of the asset. Tell me quickly, sir. Identified asset, what points are there? First we spoke that it can be explicit or implicit. Then we also spoke that asset need not be in existence. Then what else we spoke? We spoke about substantive substitution rights of the supplier. So substantive substitution rights of supplier. Tell me, sir, when will you consider this as substantive? Two conditions. One is that fellow has a practical ability and he is capable of obtaining benefits economically because of this substitution. Then we discussed a point called as physically distinct. So clearly which asset, which portion, that must be clearly separately identifiable. If it is not separately identifiable also, it is okay in one case. Which case? You have contracted to lease all or substantially all of the capacity of the asset. In that case also it is okay. Till here clear, sir? This is one part, sir, identified asset. Next part is the second one, right to control the use of the asset. In this, 2 points are given. One is you should be having right to obtain substantially all the benefits from where? Usage of the asset is important. In this benefits, what did we speak? We speak about primary output, sale of goods and all. Secondary outputs like carbon credits, other income like subleasing and all. All this money should belong to the customer only. This is one condition. Second condition, you should have right to direct the usage. Basically, a particular point speaks about your decision making rights. How, when, what, where. That is how, when, what and where. You should be able to decide. Sir, if any of these are predetermined, then customer has right to direct if at least this fellow has a right to operate the asset. Sir, when I say right to operate, that does not literally mean that I physically will go and put on the switch. I can direct somebody else also to go on and put on the switch. For example, I take a car on hire for the next 2 years. It does not mean that only I should drive the car. No, I can hire a driver also. So when I say right to operate means it's not like physically I will go and operate. So company took on hire, sir. Company will walk and come. Huh? No. Company somebody will come like that. Right to operate the asset. Either this or the customer himself has designed the asset. So everything is predetermined. No, predetermined, and how did it become predetermined? A system is made like that. A making you should be part. Design the asset. Means a predetermination you only did basically. Sir, I hope till here we are clear. You can almost finish many questions. No, let's finish off some questions and then we'll come back. Question number 1 will wait for some time because it's based on an exemption point. Lastly, we will study that. Read, sir. Customer XYZ enters into a 10-year contract with a supplier ABC for use of rolling stock specifically designed for customer XYZ. What is the meaning of rolling stock? You know this goods train? Goods train, you know, no? A goods train, each carrier will be there. Petrol and oil, this round one will be there, otherwise normal rectangle one will be there. That is called as rolling stock. I know the name doesn't match to the description, but that's how it is. Rolling stock means a train wagon is called as rolling stock. Anyway, specifically designed for customer XYZ, thus rolling stock is designed to transport materials used in customer's XYZ's production process and is not suitable for use by other customers. The rolling stock is not explicitly specified in the contract, but supplier ABC owns only one rolling stock that is suitable for customer XYZ's usage. I have told what kind of rolling stock I want, clearly mentioned. But which asset I am taking from you is not explicitly mentioned. You are having 4 rolling stocks, but only one rolling stock which matches my description. Tell me, sir, is the asset identified or not? Yes, it is identified. If the rolling stock does not operate properly, the contract requires ABC to repair or replace the rolling stock. That's okay. Whether there is an identified asset. The answer is yes, because even though it is not explicitly mentioned, implicitly it is identified. Customer XYZ enters into a 10 years contract with supplier ABC for the usage of a car. The specification of the car is specified in the contract. Brand, type, color, options. At the inception of the contract, the car is not yet built. Whether there is an identified asset? The answer is yes. If specs of the car are identified on the inception date, it's as good as asset is identified. The asset physically need not exist. Meantime, that fellow will make or he will buy, but by the commencement date, he will definitely give it to you. Inception date means not accounting date, sir. Inception date is contract date. That date is used only for one purpose. Only for one purpose. Just to evaluate whether the contract is a lease or not. Other than that inception date, nothing we will do. Continue further. Scenario A, question number 4. An electronic data storage provider, don't read brackets. Okay, read. Supplier provides services through a centralized data center that involve the use of specified server number 10. The supplier maintains, that's not may, sir, many identical servers in a single accessible location and determines at inception of contract that it is permitted to and can easily substitute another server without customer consent throughout the period of usage. So openly he is telling he is permitted to and can easily substitute. What does it mean? Practical ability he is having. But one more point also has to be satisfied. What is that? He should be able to benefit economically because of this substitution. Let's read. without customer's consent throughout the period of usage. Further, the supplier would benefit economically from substituting an alternative asset, because doing this would allow the supplier to optimize the performance of its network at only a nominal cost. In addition, the supplier has made clear that it has negotiated right of substitution as an important right in the arrangement, and the substitution rate has affected the pricing of the arrangement. So he says that in the contract I clearly wrote that I am having the right to substitute the asset, and the customer also accepted for that. That is the reason the lease rent is little lower also, and he is telling indirectly. Whether the substitution rates are substantive and whether there is an identified asset. What do you feel? Very clearly substitution rates are substantive. The moment substitution rates are substantive, there is no identified asset, there is no lease contract for you. Gone. Next one. Assume the same facts as in scenario A, except that server number 10 is customized and the supplier does not have a practical ability to substitute the customized asset throughout the period of use. So what is missing here? Practical ability is missing, and moreover it is unclear whether the supplier would benefit economically from sourcing a similar alternative asset. So first thing, he does not have practical ability. Second, I do not know whether he will benefit or not. First condition failed, no. When first condition is failed, substitution rates are not substantive. Moreover, the standard also told that whenever the customer is unable to identify whether the supplier ka substitution rates are substantive or not, then presume that they are not substantive, and therefore you have a identified asset at your hand. So therefore the lease ki further step you can go, whether right to control is there or not there. Read this. Customer XYZ enters into a 15 years contract with supplier ABC for the right to use 5 fibers within a fiber cable between Mumbai and Pune. The contract identifies 5 of the cable's 25 fibers for use by customer XYZ. What he says is they are having total 25 cables between Mumbai and Pune. Out of that, the contract only 5 are identified towards customer XYZ. The 5 fibers are dedicated solely to customers XYZ data for the duration of the contract. Assume that supplier ABC does not have a substantive substitution rate. Question is whether there is an identified asset. Yes, because your 5 are clearly identified separately from the remaining, out of the remaining 20. So that is at 20, irrespective of how they are used, whether they are used or not, E5 ka data must be, E5 must be used to only transport your data from Mumbai to Pune. So it is physically distinctly identified. Next one. Customer XYZ enters into a 10 years contract with supplier ABC for the right to transport the oil from India to Bangladesh through supplier's pipeline. The contract provides that customer XYZ will have right to 95% of the capacity throughout the term of the arrangement. Whether there is an identified asset. Sir, out of the total capacity, 95% capacity we have contracted. That is substantially all of the capacity. Therefore, it need not be physically distinct. Assume the same facts as in scenario A, except that the customer has a right to use only 65% of the pipeline's capacity. Instead of 90, he is now making it 65. If it is only 65, that is substantial, but what we don't want is not substantial. No, what we want is substantially all. Therefore, a point fail answer. Pipeline to what problem comes, you know, sir? If it is a building, each floor can be separated. Pipeline, how can you separate? You understand there is a pipeline. You understand a pipe now? How? A pipeline 65% contracting means what, sir? Pipeline, when you send something, can I send 65%, 35% separately? Possible or not possible? So that's why 65% physically, which 65% of your pipe I do not know. Therefore, it is gone. I cannot identify that. But when you take 95%, it is almost 100% of the capacity. Therefore, identified asset wala point gets satisfied. Seventh one we'll talk, okay, or else we'll finish it up. What is there? ABC Limited enters into a contract with XYZ Limited, which grants ABC Limited exclusive rights to use a specific grain facility over a 5 years period in the months of May and June. So there are some farmers, sir, who are having some grain. A grain will be sold in a particular period. For that period only they want your warehouse. Remaining 10 months they don't want. So they contracted to use your facility only for a period of 2 months in each year, like that total for 5 years. During these months, ABC Limited has the right to decide which crops are placed in the storage and when to remove them. So, e 2 months low, how to use that particular property, full rights customer will have. XYZ Limited provides the loading and unloading services also. During the other 10 months each year, XYZ Limited has a right to determine how the warehouse will be used. Which party has a right to control the use of identified asset during the period of usage? Who? ABC, XYZ. First of all, your mind should tell you one thing. Contracted period here is 5 years or 2 months in a year. 2 months in a year, like that, for a period of 5 years. Like that. So what is my lease term now? 10 months is your lease term. E 10 months low, who is having the right and is asking? Who is having the right? Customer ABC Limited. Sir, we are bothered about my decision making power, my control of the asset in the period what we have agreed. The standard never told that the periods must be consecutive periods. Suppose you all know, a book exhibition happens in Hyderabad. Presently also it's happening. I think yesterday was the last day maybe. Anyway, that fellow, what they do is, sir, book exhibitions, they are a group of some 400 stalls managed by one authority. What they will do is, every 15 days, they keep traveling to different cities. In Hyderabad, generally the trend is, sir, January or February month, like 15 days, the stall will be open in Hyderabad. For that, that is not on bookshop, no sir, it's a group of bookshops. They need a big ground. So what they do is, they book that ground in advance. What they say is, next 5 years, during this month, if 15 days we want. So what is contracted there is a right to use the property for a period of 15 days for the next 5 years. Do they have decision making rights on the property in that 15 days or not? That's all is relevant for you. Whether a 15 days is consecutive, a 5 years is consecutive periods you have taken or not, that is never the question, that's never the criteria. So that the question is based on that. This is again based on that carbon credit wala thing, you can easily understand that. Read 9th one. Customer X enters into a contract with supplier Y to use a vehicle for 5 years period. The vehicle is identified in the contract. Supplier Y cannot substitute another vehicle unless the specified vehicle is not operational. Under the contract, customer X operates the vehicle. Customer only is operating the vehicle, or direct somebody else to operate the vehicle. So directing the usage, operation rights you only are having. Customer X decided how to use the vehicle within the contract limitations. For example, throughout the period of usage, customer X decides where the vehicle goes, as well as when or whether it is used and for what it is used. For customer X can also change these decisions throughout the period of usage. That means where to go, when to go, whether I should go or not, all these decisions who is taking? Customer only is taking. Next one. Supplier Y prohibits certain uses of the vehicle, like moving it to overseas and modifications to vehicle to protect its interest in the asset. Sir, they gave a car, sir. A car you did spray painting. Will they accept? No. You change the wheels of the car to look it more modern. Will they accept that, sir? They don't. So obviously they'll put all that conditions. Just because they put such conditions, you should not say that they are interfering with my power to direct the usage of the asset. They are not. They are called as protective rights. Protective rights are okay. Whether customer X has a right to direct the usage of the vehicle throughout the period of lease? The answer is yes. Sir, some restrictions every owner will keep to protect his original interest in the asset, that are not to be seen as restrictions on your freedom to use the asset. Same type of questions. Means examples I've already given, otherwise. Entity L enters into a 5 years contract with company A over the use of an identified ship. This time the asset is ship. Entity L decides whether and what cargo will be transported, and when and to which ports the ship will sail throughout the period of usage. So he is saying that whether, what, when, which ports, everything decision making is mine only, subject to restrictions specified in the contract. These restrictions prevent the entity sailing the ship into waters at high risk of piracy or carry explosive materials as cargo. So owner of the ship is worried about what? You are worried about your cargo when a ship travels on the sea. Owner of the ship is worried about his ship. What condition he will put? Don't go to areas where there are pirates. Don't carry any explosive materials because my ship is in danger. E kind of restrictions he puts. Company A operates and maintains the ship and is responsible for safe passage. Who has right to direct the usage of the ship during the period of usage? Who has? Customer only has. Even though restrictions are there, our restrictions are protective rights. I'm sorry. So up to here 2 points are over, sir. Next one, lease components wala point is there, but before we go there, okay, let's finish off this and then only we'll go. So I wanted to cover lease term. Anyway, if you want a break in some time, we'll take, don't worry. Now, very easy point, but listen carefully. This is lease and non-lease components in the contract. Sir, is standard ka title is what? Leases. So whatever accounting we are going to discuss, that is to be applied only for the lease component and not for the non-lease component. Now, carefully observe. Means we'll start with an easy example so that you will understand the story easily. X Limited is the supplier. He supplies to this customer A Limited a car with a driver also. Since I am giving car plus driver to you for 2 years, you have to pay me some consideration each month or each year, whatever. Tell me, sir, your contract is only lease or non-lease also? Non-lease also. Why? You are giving the lease of car plus you are also offering the services of operation. Who will drive the car also? You are only providing that fellow. So the amount what you are collecting also is for both of them only, no? Now, E standard, since it is applicable only for the lease component, E amount what the customer pays to the supplier, that need to be split. So this amount needs to be split into how much is for lease component and how much is for non-lease component. Sir, how should I split, sir? Simple. 115 in the ratio of standalone selling prices. That means only car ka lease without driver, how much you would have charged? Only driver without the car, how much you would have charged? When SASP will be there, our ratio will split it off. So the amount 2 parts you make, our ratio will do. Are you understanding, sir? This is easy only. This is the first point, sir. Total 3 points are there. Correctly listen. Last point will be very easy. Second point. X Limited this time is the building shape changed. is the owner of this building. X Limited gives this building to Y Limited, who is the customer, or you can call him as lessee for now. And along with this building, he is also providing maintenance services. Water, security, power, all that he is taking care of. That means the amount what you are paying is for property, maintenance services, and this fellow is charging 40,000 per month for building. He is charging 5,000 rupees per month for maintenance services, and he is also charging 1,000 rupees per month for other reimbursements. Sir, what is other reimbursement? On this building, he has to pay municipal tax, property tax, let's say. Who has to pay property tax? Tenant or owner? Owner has to pay property tax. He says that I am the owner, I will pay property tax, but am I using the asset? No, you are using the asset, so I collect money from for that also. He is charging 1,000 rupees. So total I am paying an amount of 46,000. Now in this, which one is lease, which one is non-lease? 40,000 is surely lease component, because for a building I am paying an amount of 40 from Y Limited's point of view. 5,000 I am paying for maintenance services, adi for non-lease component. 1,000 rupees I am paying, but am I getting any services? Am I getting any building extra right? No, he is simply cheating me and taking me extra 1,000 money. Listen correctly. Whatever standard says is, first take this, okay fine, we'll not complicate it first. First let me teach normally. Building, which is a lease component. Maintenance, which is the non-lease component, the goods or services, in this case services. Others. So this is 40, this is 5, this is 1. Whatever standard suggests is, other an amount whatever is there, this you first split it into the lease and the non-lease components. Sir, in what ratio? In the ratio of SASP. So, 1,000 rupees go and allocate it to lease and non-lease component. That is nothing but that fellow is cheating you, sir. He is taking extra 1,000 money without providing any services. That means you are getting cheated because you took the asset on lease and because you are also obtaining services. So, extra cost 1,000 also must be allocated to the cost of building and cost of services. That is what logic. So, let us say 800 rupees you allocated here and 200 rupees you allocated here based on SASP. So now you have an amount of 40,800 and 5,200. Here onwards what will happen? If 40,800 ki normally Ind As 6116 will apply. If 5,200 is normal maintenance expenses, no sir, normally it will be thrown off as expenses into PRL, the treatment sir. So when there is lease and non-lease components which are mixed, you split it. Sir, I split it, sir, but that fellow is looting extra 1,000 rupees, sir. Okay, that also you allocate it to lease and non-lease components. Ultimately, you will have only two components, lease, non-lease. Sir, non-lease means other than the asset on lease, I should get some goods or services, then only it will become non-lease. 1,000 rupees is not even non-lease, because for that 1,000 rupees, I am not getting any distinct goods or services. The extra, he is looting money from me. Fine, I agreed to pay, no. So 1,000 rupees is definitely cost. Cost for what? Proportionately for both of them. This is second point. Last point makes your life simple. What is last point is, this is practical expedient of 116. Available for lessee only. You know what is this practical expedient? It says that lessee can consider the lease plus the non-lease component together as a single lease component. Ideal answer is you should split an account. Ideally, a splitting every time is not so easy. Standard says you need not split. If you can't split, don't mind. Entire amount treat it as lease payment only. That means, first case lo sir, if every month I am paying an amount of, let us say 50,000 rupees for car plus driver put together, a 50,000 la pakka driver services ka cost is there. Ideally you should split it and charge to PRL. But if you choose this practical expedient, what will happen is we will feel as if entire 50,000 I am paying for the car itself. So entire 50,000 will be part of your ROU asset account debit to lease liability. Inka services ki separate accounting will not be there. So non-lease component you will ignore it and merge it with the leased component and account. Each choice standard, not compulsory. Expedients are never compulsory. Expedite means what? Expedite means making the process quicker. So practical expedient means for making your life easy, much more quicker fashion you can finish off your accounts if you ignore the splitting part there. Exam easy sir, two numbers they'll give you, will split it off in some ratio. Real life getting that number is difficult. So he says that use this expedient. So that is this identifying the and separating the lease components. Separating lease components, optional practical expedient. This allocation of consideration. All these points are over for us. Next, contract combinations. Sir, as it is whatever you studied in Ind As 115, and this question is also not there, so I'll quickly wind it up. Sir, I entered into a 3 lease contracts of machine A, machine B, machine C at the same time with the same supplier. Single customer, single supplier entered into 3 different contracts at the same time. So a standard tells you, should you treat them as separate lease contracts, or should you club them and treat them as a single lease contract? That is what the standard is asking. Same discussion was there even in Ind As 115 also. When there is a contract between entity and the customer entered at or nearly at the same time, then should we treat it as separate contracts or we should club them? The answer is you should club them and treat them as a single contract if any of the following is satisfied. I am not talking 116, I am talking about 115. Number 1, they are negotiated as a single package. The consideration in one contract is linked to the performance in another contract. Number 3, all the 3 contracts in effect result into a single performance obligation. Away 3 points, here also it is there. Only thing is, third point low, instead of single performance obligation, single leased asset. Machine A, one contract. Machine B, another contract. Machine C, another contract. Effectively, how many machines are there? 3 machines. A contract somewhere you wrote that all the 3 machines are to be joined to create a assembly line for you. Assembly line means what, sir? Somewhere you input raw material, after machine 1, machine 2, machine 3 ka process, ultimately finished goods will come. So 3 contracts are there, but ultimately all the 3 contracts assets have to be joined. If assets are going to be joined, the standard says you are taking a single asset on lease under a single contract. Even though you have recorded 3 contracts, in substance they are a single leased asset. Same point, sir. Next, inception and commencement. We already discussed inception of lease or the inception date is relevant only for one purpose. What is that purpose? Whether the contract between the customer and supplier contains a lease or not. Just that, nothing else. Sir, now what is this inception date? Inception date is nothing but whenever the terms are agreed between the parties. Which terms? The asset terms, payment terms, how much period the lease has to be valid. Contract terms will be there, no? Whenever the terms are agreed our date is called as inception date. Formal definition is the inception date is defined as the earlier of the following dates. Number one, the date of the lease agreement, or the date of commitment by the parties to the principal terms and conditions of the lease. Normally, lease agreement date, inception date. But if you have agreed to the terms even before such date, then that date must be treated as inception of the contract or inception of lease date. This is the first part. Second part is commencement date. Commencement date is something which is relevant for lessee recording ROU asset account debit to lease liability entry. Tell me, sir, at which stage can you recognize asset in your books? When asset is available for my usage. Before that, can I record asset, sir? Just because you gave advance for machinery, can you capitalize machinery today? You cannot. Sir, 100% advance I gave, sir, does not matter. Asset is not at my place already. I don't have the right to use the asset yet. I cannot capitalize asset like that. Lease contracts law, at what date will you pass that entry? On the commencement date. So what is commencement date? Is defined as a date when lessor makes the underlying asset available for use by the lessee. If you understand the purpose of the definition automatically you will know. Commencement date is relevant for accounting purpose. Lessee recognizes the ROU asset and lease liability. Lessor recognizes net investment in lease. Then hit okay, 5 minutes, we'll get a break. Last point, sir, before you get a break. Lease term. A lease term is a very important point, but you see this is also there in the definition of the lease. Definition of the lease law, sir, you wrote this one, for a period of time. A period of time, now he is defining it as lease term. Okay. He says that lease term is the non-cancelable period. Non-cancelable period means when you and the lessor enter into an agreement. The lease is valid for a period of 5 years, non-cancelable. The non-cancelable period is definitely lease term. But some contracts will give an option to extend. Sometimes they'll give you option to terminate also. So how our standard defines lease term is a non-cancelable, because before this period the contract cannot be cancelled without paying significant penalty. So E period is anyway included, plus the period covered by extension option, if it is reasonably certain that lessee exercises such option. Sir, whether lease should be extended or not usually will be the decision of the lessee only. So a extra period, should you include it or not, depends on whether that fellow is likely to extend or not. If he is likely to exercise, add it, otherwise no. Next one, also include periods covered by termination option if it is reasonably certain that lessee would not exercise such option. Sir, what is this would not exercise? Earlier you told would exercise. Nothing, sir, they are not the same case. It's not like second box and third box will come in the same scenario. They are two different scenarios. That way it looks confusing. Nothing like that. I will explain the example. But here one more point is there. Lease term should be a period that is enforceable. What is the meaning of enforceable? That means one party should be able to bind the other party legally for this term. Suppose you and me enter into a contract for a period of 5 years, or 10 pages story we wrote. Last somewhere you wrote that the lessor or the lessee can cancel the contract anytime without paying the other party a significant penalty. But what is the point of writing the contract, sir? Today you deliver the asset to me, I start using, tomorrow you says, give me my asset back. I said I won't give. Then you will invoke your right to terminate the contract without paying me 1 rupee also. Each type of contracts are called as not enforceable. If it is not enforceable, there is no lease agreement in the first place. So definitely you should make the other party bind to the contract at least for some period of time. Then only there is a lease term. If anybody can cancel the contract any time with insignificant penalty, then there is no lease term. So lease term, when it is not there, you don't have a lease itself. But identified asset, okay. Physically distinct, okay. Right to control the use of the asset, okay. But the contract can be cancelled any time by any party. And can the other party bind the counterparty? No, you can't bind. What is the point of starting the accounting when tomorrow also the asset can go back again? Standard says there is no lease for you. So lease term should be an enforceable term. Now coming to this formula boxes and all, see here, sir. Suppose the lease is for a period of 7 years and lessee can extend by another 3 years. So tell me, sir, what is the lease term? Sir, what is the non-cancelable period in this? Is it definitely lease term? There is no doubt. E3 you will add if it is reasonably certain that option to extend is exercised. This is one case. Another case is lease is for a period of 10 years. Lessee can terminate the contract any time after 7 years. You observe both are same story and there are different ways of presentation. The second case usually the fellow on termination charges a penalty basically. Otherwise option 1 and option 2 both the examples are same only. In fact lease term also will be same. Look at this. Lease term is equal to, what is the non-cancelable period now? 10 years lease agreement, but that fellow can cancel even after 7 years also. No? So non-cancelable portion is 7 plus. This time it is not option to extend, it is option to terminate. I have option to terminate after 7 years for the next 3 years. 3 years you can add when it is reasonably certain that lessee will not exercise that option. Do you understand, sir? When option will not be exercised, then you can add. Sir, it won't be always add. Sometimes you may not add also. Sometimes lease term will be only 7 years. Possible. I just added both the cases because I have to show this completely. So I did that. Anyway, think peacefully, sir, based on that answer. I took an asset for a lease of 5 years. On first day only, lessor gave me a right to extend the lease by another 5 years also. In case I exercise that, overall my lease period will be 10 years. But first day what I thought is, my business that much scene is not there. After 5 years anyway business success is not guaranteed. Even if I work for 5 years also, that's a big deal. And what you thought is, a right to extend an option, you will not exercise any feeling when you are on day 1. Inception, commencement date. So on the commencement date, you feel that the extension, but you feel that only 5 years. Isn't it feeling? Tell me, sir, is there any rule that for the next 5 years I should have the same feeling? A feeling again, sir, anytime it can change. Today I believe that my business won't be that successful. So 5 years if I operate, later on I will vacate this premises, and a feeling you will have. But imagine your business is doing too good. You have developed a lot of reputation, goodwill in that area. Lot of customers are coming, looking at you, or people who are based on you. They are also starting their industries around. You are manufacturing something. A raw material supplier fellow is also putting his industry here, looking at you. There are so many contract customers are entering. You are also exporting goods also. Tell me, sir, your assessment can change or cannot change? Yes. So your lease term, first day, it was only 5 years. But when you are standing at the end of 3rd year, you may feel that I will extend the lease. In that case, your lease term will be 5 plus 5, total 10 years. Means what I am trying to say is reassessment of lease term is possible. Because first day, when you wrote this formula, no, you used the words reasonably certain. Reasonably certain or uncertain, leave it. But the point is, something is uncertain in that, no. If something is reasonably certain, there is some portion of uncertainty also. Reasonably certain that option will be exercised. Reasonably certain that option will not be exercised. That means things eventually can go in the opposite way also, no. When things go in the opposite way, whatever first day lease term you have estimated, that may have to be changed. This is one case. So your business is doing well, you want to stay there only. Next, look at another case. 1, 2, 3, 4, 5. This is my basic lease period. I can extend it by another 3 years, 6, 7 and 8. First day, I felt that I will use it only for a period of 5 years. But in the 3rd year, lessee incurred costs or significant improvement cost on leased asset. You took a property on lease, sir. Building you took. First 3 years you operated. You thought that lease will be valid only for a period of 5 years. After that, option to extend is there, but I will not exercise the option. But 3rd year, sir, your business was doing so well that big customers are coming. You thought that no, this building is looking very shabby and cheap. Let us go for a modern interior. You burnt some 50 lakh rupees only on interior. After doing interior, tell me, sir, will you leave this premises within next 2 years, sir? Or will you likely to stay for the remaining 3 years also and enjoy your benefit completely? The chances of you extending the option is now increasing, isn't it, sir? So first day I might have felt that the lease term is only 5 years, but later on today I may reassess that. I may think that this time my lease period is 5 plus 3, total 8 years. A reassessment possible. Then reverse also possible. What is reverse? Originally I thought that I will extend. I considered 8 years. 4 years is already over. 4th year I suffered a huge loss. I thought that there is no point of doing this business here. Or some COVID is likely to come. Big lockdown is going to happen. Why will I pay rent unnecessarily? Will I extend? No? When COVID lockdown is happening, I'll immediately cancel it the moment it is 5th year is over. I will say I will not extend the lease. Reassessments are possible or not possible? Possible. Whatever we have discussed, all these points are given here, sir. Reassessment point also is given here. So that brings us to the accounting part. Accounting part, this is a starting version, sir. You can take a break now. Post break, our accounting will start. Up to here, it's only the theory. Here onwards, you will not get theory. Full direct questions you will find. So, chalo sir, take a break and get back.